question. First of all, are there teams that you've met who use AI? And number two is, do you see a world where AI replaces a lot of the strategies that these managers are running?
It's a good question. We have met some teams that use their AI, but my initial take is just skepticism. I mean, it's too early to tell. It's just too early to tell unless it's used as a tool or as an analyst tool, but the portfolio manager himself has experience trading. So from my perspective, I still think it's too early to tell as a trading, like this system has edge in the market or it's figured something out. We are seeing allocators who thematically are asking, like, look, we're looking to invest in managers that are using AI. But I don't know whether I don't know if they know exactly what they're talking about, to be honest. They're often, I mean, they're just saying that, right? But I think it's more prevalent from a perspective of an analyst using it. And then eventually, as it's coming into mainstream, we could find managers that are just, trading AI.
Yeah, I was thinking of changing our company name to OPIM AI just to raise, $1 gazillion, because that seems to be what every startup or dead shell company is doing, by either becoming a digital assets crypto treasury company or adding .ai to their domain.
The valuation will go up just on that. Is it available? OPIM.
I better get on it before we...
I mean, what's your take? What do you see? I mean, are you finding traders and managers that are like, we have an AI system in place?
Yeah, no, that's a really good question. I think the weird thing is that if you think about AI in the most rudimentary sense, which is machine learning, it's been around for a while, but the new iteration of more automated AI, where it has more discretion than it used to be, because machine learning would simply provide signals, and then as a trader, you would then, or portfolio manager, would take those signals, maybe use a second AI to build a portfolio, and then execute that portfolio. But you're always going to know relative degree what the strategy is doing because you predefined it, right? True AI, or at least broad focus AI, or at least broad discretion AI, technically should allow the AI to observe the market, you provide it with some guidance, and then it should be able to capture opportunities regardless of the situations. Now, just like humans, you might have an AI that does better in technical analysis, and then you have an AI that does better in, as you mentioned before, analytical or fundamental analysis, which then translates into a trade idea. So I can see treating these different AIs as different approaches to it. To your point, yeah, almost every fundamental manager that I'm meeting now is using AI as a replacement for analysts, at least junior analysts. And I think the next generation they're cooked, because I don't know how you're going to find an opportunity to learn about fundamental analysis when senior managers are now using and relying on AI for a junior analyst work more and more. But in terms of trading AI, I'm actually seeing more of that in the digital asset space, in the crypto space.
Yeah.
I'm seeing a lot of that. And these are teams who are running as prop shops, maybe derivatives or spin-offs from exchanges. A lot of the decentralized exchanges or brokers are opening up programs. Sometimes they have different names for them. It could be like Vault on Hyperliquid. It's called like Vaults. It could be copy trading. But essentially, retail investors can go in, you copy that trading, and whoever owns that strategy gets a fee. So what some of these teams do is they develop the AI trading strategy and they build it into a strategy that runs automatically. So there's not a person behind, but there's a computer. I think that's just fascinating. I'm still trying to observe and track some of these strategies. By and large, they're very competitive. And by competitive, I mean they're within like the mid-teens. And it strikes me that if I take that mid-teen performance and I compare it to, say, like a Templeton fund or like a multi-manager or 0.72 fund, for example, it's within striking distance, right? Like a mid-teen, decent sharp, 1.3 maybe sharp. Like I'm seeing a lot of those. So as an investor, what am I paying for going to a brand name versus a copy trading program when I can get equal? It's really just confidence, quite frankly, and
that's it.
Track record.
It's confidence.
Right.
Yeah,
and
that's it. That's what's
right. Because the only difference is that institutions have wrapped insurance, risk management, D&O, all sorts of bells and whistles, but you pay for that. That comes out of the management fee. And so I'm a little bit conflicted in a way because this new generation of traders and asset managers arguably don't necessarily need to go through the institutional route, but they're going to be capped on scale, right? There's no way that some of these platforms are going to raise more than $10 or even $5 for that matter. But maybe that could change in the future, right? But going back to the question about AI, yeah, I'm seeing a lot of that on the crypto space, and especially with this next move by both the US regulators and Hong Kong as well, this move from transitioning and converting traditional securities management and execution into an on-chain space where now you have trading entirely on-chain and in benefits of having 24/7 trading, immediate settlement. That's something that pairs extremely well with the new world of AI execution. But just like
Yeah.
algorithms and ETFs have dominated trading on NASDAQ and S&P, AI trading, I think, is going to be the crowded space moving forward. So on a last note, I am also seeing teams converting their traditional trading strategies and getting AI to learn it. And so to adopt it. So they have their own strategy that they've been doing for 10 years. And they're like, you know what, this is exhausting. I have to look at the markets all the time. And I'm not always going to make optimal decisions. So I'm just going to teach my protocol and have the AI observe how I trade and learn from that. That's what I'm seeing more and more as well.
Yeah. Yeah, no, that's great analysis, Alvin. I think what you said, it's the confidence, right? And it's the length of the track record. Because if we were talking, I mean, if we're talking in 5 years and the track record is there, the performance is there, and the manager is saying I'm using AI and they have a 3 to 5 year track record with excellent risk adjusted returns, that there's that confidence to make that allocation. And it's just that it's a little bit too early, at least. This is just my opinion, right? To really understand, is there something there, or did they just get lucky in this just roaring move of a market? And so,
Yeah, historically, when humans have relied on machines to trade or make money, it's worked until it's
yeah,
broke, right?
right,
And that's simply because that's because there are reasoning limits in yesterday's technology on AI. I'm starting to think that a lot of those barriers are breaking down because the reasoning engines are so advanced now and they're so much more adaptable than they used to be. I think the only thing that's missing really is for some of the language models and the LLMs and the machine learnings to think outside of the box, which is this imagination which new managers are able to build, which is to imagine new
yeah,
strategy, right? But then as an allocator, you're asking, well, I don't want someone who's imagining new strategies. I want a proven systematic approach. So it really depends on your
correct,
right
yeah.
on your views
I
and your
mean, I think the part that's interesting, I'm curious if you use it, but I think from, like you said, the analyst perspective, from the allocator perspective, have you started to use AI in terms of analyzing managers? And if so, and like in what capacity?
yeah, for due diligence, definitely.
Yeah.
We're building a DD program that will have AI on the back end to help extract the data, number one, take unstructured data and turn it into structured data. And then number two, after we've built the proprietary scoring system, after that, then create an interface for allocators to converse with the AI to talk thoroughly about not just the strategy, but the due diligence that we've done on the manager. So that could be corporate governance, conflicts of interest, could be structure, could be P&L or a financial soundness, all of it encaptured into a due diligence process. So as an allocator, and our allocators will then have confidence moving in, and some of these you don't even really need to do on site, right? Everything can be done pretty much on desktop share, which is our approach to it. But in terms of using AI to analyze data, just strictly like, for example, like if we patched an AI into the FundSeeder platform, I think that could be interesting. Where,
Yeah.
right, because each investor has a slightly different skew how they want to look at the data. Right. And that could be an interesting angle where I say, okay, look, I have my preferences and here's my weightings on my priorities. I want to tap that in and use my AI interface to talk to the fund seeder data. Yeah,
Yeah.
that's cool.
I mean, that's just going back to FundSeeder. I mean, that really, our vision, and especially speaking of like allocators, they have their own portfolio, the way they look at it, the type of managers at the different life cycles. So if we can have 100,000, 200,000 traders that have different types of strategies, that gives a potential allocator that's looking to allocate to emerging managers like a higher likelihood there's going to be something there instead of just the same type of managers that are on these hedge fund databases or that are on these different roadshows. And we're really just trying to like expand that network and having a place where, again, if you're a trader or an emerging manager in Hong Kong, in Czech Republic, in New York City, you have a shot and a pathway to then have potential allocation from allocators that kind of interested in your type of strategy.
Did you hear about, there's that fellow from OpenAI, Leopold Aschenbrenner. I don't know if I'm probably butchering his name, so apologies. Left AI, wrote this opus magnus paper called Situational Awareness, and then built his own.
Did you read it?
I haven't read it yet. I haven't read it.
I clicked on the link. I read a little bit.
Yeah, I want to ask you if you could give me your take on what he's done, because this, just to tee it off for you, apparently he left OpenAI. There's a little bit of fuffle about why he left. It was a lot of debate about security and aligning interests with human interests, national security with AI development. He built a company called Situational Awareness LP, which then became a hedge fund. And the theme of the hedge fund was a thematic hedge fund. It wasn't anything too unique from a strategy level, but it was unique in the sense that it would long AI names, AI development names, and short laggards. And they're up like 57% year to date.
Look, I think I did read a little bit about it, and it's compelling, especially as a stock picker. I mean, if you have a stock picking strategy where you're thematically trying to find out which sectors are going to do well based on all this information that you're collecting and then analyzing real time, and you have the language models set up, I think there's something there. I don't think the guy got lucky, obviously, from that perspective.
Yeah, I don't sense that he's using AI as a trading instrument or as an AI. I need to look at that. My sense is that it's very simple in the sense that he himself has such a deep understanding of the space that the theme is to long AI names and then short laggards, right? Those who are being disrupted by AI. That's the hype. That's the theme right now.
That's it. That's right, all it is. That's a simple strategy. Just go long AI names and short the ones that are.
Yeah, anyone can do it. It's just that he was able to raise $1.5 billion because he came from OpenAI. And so that's a branding, that's a credibility monetization.
Yeah. But I'm wondering if there's more behind it. Like, there's a greater, maybe because, if you and I started a hedge fund today, Alvin, and we said, he just told us his strategy. That's a little bit simplistic, no? But
yeah, exactly. There's no barrier to entry into that. In fact, a lot of PMT managers have made very, very good money. Yeah, some of them within the 50% mark, longing AI, right? Like those would argue that, my mom would argue that her NVIDIA trade from 5 years ago has outperformed every manager, right? And she's like, I'm better than my own private banker, right? She's like, what are these guys doing? I bought and hold NVIDIA for 5 years and I'm up 2,000%. All right, what is this 50% stuff? This is nonsense, right? I'm like, Mom, just relax, okay? It's, she's like, I could be a fund manager. I'm like, of course you can, right? Who deny that of their own mom? And I guess that's that's actually symptomatic of what we talked earlier about a lot of managers who have a great source of alpha. But to your point, alpha is not something that can be easily replicated. And, Leopold, I guess, I don't know if he's both fortunate, but he's also clever because he's able to monetize what he was good at, which was having a deep understanding of the industry.
Yeah, that's right. And also probably, and this is a great Rolodex, and he probably has the personality to command that type of respect of people who would give him money, right? And that's the top 1%. And I always think is the best traders, the best investors are going to be the top 1%. And then the ones that actually are able to manage money have to have that business acumen or that personality or that to be able to attract capital. So he has some of that. I would imagine nobody's going to launch with a 1.4 billion.
1.5 billion,
yeah. Yeah,
That's the dream, Emanuel. That's the dream. 1.5, 1.5, right? 1.5 yards, year one.
You should have him on the show, Alvin. You should totally have him on. You should reach out after this interview and invite him on.
I don't know how I feel about it, because on one hand, it sets an expectation for a new generation of managers. Like, hey, he did it. Right? He's just really smart at what he does, and he set up a business. Yeah. And I'm like, yes, that does happen. But for every one Leopold, there are like 999 John Does
Yeah, it's tough. It's for sure. It's a tough industry to crack in, and we've seen this. I mean, just a kind of a funny market wizard story. Jack is writing a new book, or he's looking to write a new book, and so he had this tweet, and where people could apply on our FundSeeder site to potentially be featured in his upcoming book. So as you can
I'm a big
imagine, we
fan, by
was
the way. I'm a big fan of his books. I think it's must read, right?
yeah,
Jack's books, Market Wizard series, must read for anyone going either into finance, asset management, securities trading, whatever. And I
yeah,
think it's how he phrases his questions so that he doesn't dumb it down, but he extracts the first principal essence of what he's looking for in his guess. And so by doing that, the reader is able to sort of demystify and see that, hey, this is all just lingo. At the end of the day, trading is about, right, the formula is the same. How do I find profitability or opportunity sets either in trade where you have a dispersion in value, or you're a great stock picker, or etc. And I think that was very inspiring for our generation. And I think the following several generations, even this generation, I still have young kids coming up to me and be like, look, I really love this book, Jack Schwager, and he talked Ed Thorpe and how he was an engineer and he was a nobody and he became one of the best managers in the space. It's great to see that Jack is still writing and he's still producing. So this new book, what's the take on this one? Because it started off with just traders, then he went to hedge fund managers. Where are we now with the new book?
this one is focused on solo traders not managing other people's money, and because they don't need to. So it was the point I was making was we had a good amount of people apply. Prolific stories like one guy at 25,000 now managing 150 million. And when we reached out and say, hey, okay, Jack wants to talk to you, they're like, oh, I changed my mind. I don't want to be in the book. So like it was like this humorous thing that sometimes, like, I mean, even if you find someone who's really good,
Did
right?
you say
Like
why?
they don't want to come out of the shadow. They maybe just wanted to be recognized by like, okay, and then they're like, I don't want to be in the book or I don't want to manage money, right? So traders are interesting, from that perspective.
That's hilarious, but also understandable. You've built your wealth. The last thing you want to do is put a target on your back, and number
Exactly.
two, add a complexity to something that has already made bank. So there's some
Yeah,
wisdom.
I agree.
So how do you do it? How do you convince those who had both a successful track record, made capital, and also willing to come out and run other people's money?
I mean, there's a certain amount of a competitive element that they have to be competitors. They have to not be just satisfied, and they're always looking to go to the next level in terms of achievement, right? So again, that funnel, like not all of them have that it factor, if you will. Some of them are just happy and they content, or maybe they're afraid of having other people look at their money. But I think you have to, similar to how Jack inspired many traders, right? When they read a book and a profile of an Ed Thorpe, like you mentioned, or like, oh my goodness, this person made it from nothing, or he was playing blackjack, or these stories that people can relate to is the beginning of the journey for many of them that started trading. I read Jack's book and now are actually successful hedge fund managers. So
Legendary.
the next step, right, would be like, well, you can be like, you could have a 0.72, a Citadel, a Balyasny, right? That, like, this is the next level to your acclaim. So there has to be some type of testimony or look up to this person, or this is the direction you're going. If it's about building a business and really scaling it and sort of that competitive element, that's even less than the 1%. I mean, you're talking about like 1 in a million almost from that perspective.
I will say this, and I have noticed in conversations I've had with managers who have approached us to join our platform, I'm seeing an increasing number of portfolio managers who just want to run money for a small group of people. They
Correct.
actually don't want to run money for larger firms. In fact, I'd go so far as to say it's an existential debate or question for them. A lot of them have come out of larger firms and no longer want to be shackled by captive capital. And it's freedom they're looking for, in short. So they'll join us and be like, look, I don't want to work for it. I just want to build my book and run the book. I want to play golf and then go to the markets and have that discretion over my universe. So master of universe in their mind is not mastering just the markets. It's also mastering their time and their life, especially after they've reached a certain stage. And so when I asked them, I said, do you see yourself running 5 yards, 10 yards one day? They're like, no, actually, Alvin, I'd be happy with running 1 yard, a billion, or even 500 million, because it's enough for me to live my life comfortably, but I enjoy the markets for what they are. And I find that fascinating with this new gen.
Yeah, I think you hit the nail on the head. I've seen the same thing. And a lot of, I would say, the top tier traders that I would love to have them manage money or help them grow their businesses are so content
Yeah.
and smart to be like, I do not want to go on this journey where I have no idea what I'm doing. And they turn it down. I mean, there's one market wizard guy that's consistently, yeah, he just has no interest, absolutely they have no interest in managing money. And I respect that because it's a totally different ball game. And so that's why it becomes even more, at least for us, and I'm hoping with this accelerator, right? Like that, not only do we find that market wizard caliber trader, but then the one that actually already internally has a vision and a dream of building and scaling the business. Because if they're not willing to like have that dream, then it becomes extremely difficult to help them grow.